Alright, what's up everyone? Welcome back to the channel. This is Emil, and in today's video we're going to have a look at Qualcomm stock. So we're going to go run through exactly what Qualcomm does and all the industries all the huge, enormous growth industries like 5G, AI, Internet of Things that Qualcomm is going to be supplying chips for in the future. We're going to look at the bull points for Qualcomm, the risks or the bear points for Qualcomm. We're going to have a look at the numbers, and then finally I'm going to give you my overall opinion on Qualcomm and whether I think it's a buy or a sell and exactly what I'm doing in regards to Qualcomm. So before we get going, I just ask that you smash the thumbs up button, click subscribe if you haven't already. I talk about investing mostly in the stock market but also in cryptocurrencies, general finance and business, and make sure you've hit the notification bell because I'm a really small channel so it won't appear in your recommended feed unless you've hit the notification bell. So with all that said, let's get cracking. So Qualcomm is a semiconductor company, but they produce chips for smartphones. So they get the majority of their revenue from smartphone chips with their connectivity chips. So they allow smartphones to connect to 1G, 2G, 3G, 4G, and soon to be 5G. Well, actually already 5G, but in some phones, but definitely in the future it's going to be 5G. So Qualcomm make a lot of those connectivity chips. That's their main revenue source. And if you've heard of the Snapdragon, if you've ever been researching a phone and you hear the Snapdragon chip or whatever, the really highly efficient chip that can power the phone, can run functions on the phone without using much energy at all, so it doesn't drain your battery. So the Snapdragon is a really, really good chip by Qualcomm, and it's been around for a good while now, but they keep making it better and better and better. So Qualcomm's actually a really, really old company. It's been around for well over 20 years, but they've had a pretty bumpy ride along the way, and they're actually pretty close to an all-time high at the moment. But let's just keep going through what exactly it does. So the majority of their revenue is from creating these chips, like actually manufacturing and selling those chips to the likes of Apple, Samsung, Oppo, all the different smartphones. But they also manufacture goods for like broadband, modems, all that kind of anything that's kind of connects devices. Qualcomm is the leader in that space. But apart from creating actual physical goods, they have an enormous amount of patents, and their patent library is thought to be the most valuable patent library in the entire world. So all these patents they license out to other manufacturers because they invented all these things recently, all these patents for connectivity and the likes. So that's a much more profitable business, although it makes up a smaller portion. And it often gets them kind of involved with lawsuits of people using their patents when they don't have permission, or people accusing them of having a monopoly on all these patents. So there is a bit of a risk there with those patents. But in the future, like they already have like 85 patents for 5G, and that number is growing and growing. So this patent business is really profitable and going to continue into the future. And their products are used in pretty much every enormous growth industry there is out there, from AI, 5G, Internet of Things, electric cars in the future, or autonomous cars, robotics, smart devices, smart cities. All that stuff will be using Qualcomm chips in the future. So there's a real enormous room for growth. And just to explain also, as I mentioned, 70% of their revenue at the moment is coming from smartphones. However, in the future, they see that other 30% that is kind of in like other things apart from smartphones. Like other things will in the future be connected to everything else, just like the way smartphone is connected to every other smartphone. In the future with 5G and Internet of Things, every like device will be connected to every other device. So you will need some sort of connectivity chips, and Qualcomm is the leader. So that's kind of one of the growth potentials for Qualcomm. And I like to think of it as Qualcomm is selling the shovels for the 5G gold rush of the future. So I don't know if you know that analogy or that anecdote. The people who made the most money when gold was found in America were the people selling the shovels. So Qualcomm's kind of selling the chips for all the devices that will be using 5G and Internet of Things. Like autonomous cars, because each autonomous car will have to actually talk to each other and talk to the street light. So then once the autonomous car is approaching, the street light automatically turns on, and etc, etc. And my mobile phone will be talking to this car, telling the car, oh, watch out, I'm about to cross the road. And the autonomous car is like, okay, cool, I'll let you pass. So another cool thing that's going to be coming out that may or may not use Qualcomm chips is just a rumor at the moment, but it's kind of a moonshot, is the Apple glasses. So I don't think most of you would have heard of them, but basically they're going to be like the Google Glass except Apple glasses, where you'll have augmented reality and your Apple Glass will be connected to your phone, so you can see all your messages just by wearing the glasses in augmented reality and, like, you know, move stuff around and send texts. But sorry, I'm getting a little bit off track there, but I really think that's going to be so cool once they come out in a few years. One of the reasons that Qualcomm is really pushing the fact that they're going after the 5G and the artificial intelligence and Internet of Things space, they're going to be having chips that are powerful enough to run AI programs on a smartphone. At the moment, usually if I wanted to do an AI program, because it takes a lot of processing power, I'd have to run the program on a cloud computer, on a cloud database. So I'd send whatever program I want to the database, to the strong computer in the cloud, which sends me back the results. But in the future, with the Qualcomm chips, you'll be able to run simple enough AI on your phone directly. All right, enough about AI and 5G, and let's get on to the bullet points for Qualcomm. All right, so firstly, I'll just talk about a couple of bullet points that I don't think anyone else has really talked about, or most people aren't aware of. But right now, there's kind of been a slump in smartphone sales in general. And smartphones are somewhat cyclical. So just like you don't buy a car every year, you kind of wait a few years to buy a new car. Maybe every 10 years you buy a new car. It's kind of the same now with smartphones. People only really buy smartphones, maybe some people obviously buy them every year, but me, I probably buy a new smartphone every 2 or 3 years, and you're probably the same. And with the coronavirus crash, there's going to be a serious slump in smartphone sales, and there was a serious slump in smartphone sales for the last year or so, and the coronavirus has definitely accelerated that slump. So coming out of the coronavirus, there's going to be a pent-up demand when all these old phones, like once my phone starts running low on the battery starts getting worn out, or I want to get a better camera or whatever, there's a pent-up demand for newer smartphones. So that could really skyrocket smartphone sales in the near future. Another bullet point about smartphones as well that I don't think many people have thought about either is the fact that there's so many people coming into the middle class worldwide in the likes of India and China who previously might have just used brick phones or not even have a phone. Now they're coming into the middle class and they'll want smartphones. They might want just cheap ones that are like €200 or whatever, but they'll all start wanting smartphones. And there's going to be like, in the next decade, there's going to be like 1 billion or 2 billion people added to the middle class. So they'll all need smartphones, because you can't really be in the middle class without having a smartphone, unless like 1% of people in the middle class don't have a smartphone. So they'll all need smartphones every 2 or 3 years. So that's another ticking time bomb of smartphone sales growth. To add to the smartphone thing, there's obviously the super cycle in 5G smartphones coming out over the next number of years. So within probably 5 years, every smartphone will be 5G capable. And in the next number of years, pretty much most phones that are new coming out will be 5G. And 5G phones, not only, so say Qualcomm for a 4G phone, Apple would spend $40 giving them to Qualcomm for one of their chips or whatever. Now, for a 5G in the iPhone 12, for example, they're going to need to be spending more money with Qualcomm, because the chips are going to have to be better, and the chips will be more expensive that Qualcomm will be selling for the smartphone. And not only that, there'll be more parts that Qualcomm can sell to every phone manufacturer. So revenues should grow from smartphone sales as well because of that fact. Okay, but everything isn't perfect with this company. There are some drawbacks and some risks and some things that I don't really like when I started researching into this company. So let's go through them, and then I'll go through the numbers, which are some pretty interesting numbers, and then finally give you my overall opinion on Qualcomm. So first, about the bear points. Qualcomm has bought back an enormous amount of its own shares, which to some people is a good thing, but like since their inception, they've spent like $60 billion, over $60 billion on share buybacks. So they've bought back 2/3 of the market cap of the company since inception. And what do they have to show for it? Generally, like a bit of buybacks is okay, but Qualcomm has really done an enormous amount of buybacks. And to me, sometimes that kind of gives off this kind of short-term preference for Qualcomm, that their management is kind of interested more in their own personal paychecks rather than the long-term growth of the company, because with buybacks basically artificially inflate your stock price. Well, not artificially, but kind of artificially inflate your stock price, and usually management get incentive rewards if the stock price is going up. So rather than actually managing well, just by issuing buybacks, they're going to get paid more. So that's something I don't really like to see. It's just it's a short-term fix, but it doesn't really add anything to the company, in the fact that like if that had been reinvested into the research and development department, they could be way ahead in all of the areas that they already are. Or even maybe, I'm not a huge fan of acquisitions either. However, yeah, at the same time, I guess they have so much money, they don't really know what to do with it. Maybe they know that if they put it into the research and development, they're already putting about 20% of revenue into research and development, which is quite a lot. And maybe they just don't know what to do with all these profits that they're getting, so they're just buying back their own stock. And they also issue a pretty healthy dividend that I'll talk about in a minute. But if you want to understand my full thoughts around buybacks, I'll link up a quick video up there explaining what buybacks are if you don't really understand them. But yeah, let's move on to the next bear point. As I mentioned, I probably would prefer if that money was going into research and development, especially with all the huge new markets that Qualcomm are going into. Like, they really should be trying to lead that space instead of trying to please their shareholders as much, in my opinion, because there's a lot of competition in this space. There's the likes of Nvidia, Skyworks, even Apple, Intel. There's so many different semiconductor companies, and semiconductors are kind of a commodity, so it's kind of whoever can make the most efficient semiconductor for the cheapest wins. But the nice thing also about Qualcomm is that they have those patents and some of the things that aren't just semiconductors. But yeah, what I meant to say was that the research and development, the amount that they are spending on research and development has been dropping the last number of years, which I don't like to see personally, because I'm a long-term investor, and research and development usually means that investment usually doesn't reap rewards for a long way down, but those rewards are much higher than just like a short-term share buyback, which will just slowly increase the stock price rather than actually increase the value of the company, the intrinsic value of the company. All right, so let's quickly run through the numbers for Qualcomm. So Qualcomm are sitting on about $12 billion in cash and $13 billion in long-term debt. So all in all, their balance sheet is okay, and I think it's not too worrying in comparison to some other companies like Nvidia, which have like no long-term debt. This balance sheet isn't great, but at the same time, Qualcomm are making a fortune, they're making plenty of money, so I'm not very worried about this balance sheet. Having a 1-to-1 on assets to liabilities and cash to long-term debt is perfectly safe, really, in the short term and medium term, but it's not perfect either. It's not a 10 out of 10 smashing balance sheet, which I usually like to see and like to invest in. They have a really nice dividend. So their dividend is almost 3% and their payout ratio is 60%. So that's a very good dividend for a relatively safe company like Qualcomm, especially in times where their interest rates are zero everywhere else. You can't get money in the bank. You can get 3% with Qualcomm, and Qualcomm's likely to grow in the future. So for me, Qualcomm's a really interesting stock for a value investor. Not only does it have a really strong dividend, but it also doesn't have a crazy high PE ratio. And that might be because it is a pretty old company and it's been buying back its own shares, and its balance sheet isn't absolutely astronomical, and its growth isn't absolutely astronomical. But in comparison to the industry, its PE ratio isn't sky high. It's pretty low compared to the industry, and it's not that high. So at the moment, their PE ratio is 21, and that's actually quite historically compared to its average over the last number of years. I'll show it now on the screen. You can see that their average over the last five or so years has been more in the like under 20 range, like in the 16s, 15s, 17s, and now it's at the 20s. So it would have been a nice time to be picking up Qualcomm during the coronavirus crash, but I suppose you could have said that about any stock in the stock market. It would be a good time to pick it up then, pretty much. But yeah, it's not a super high price multiple in a PE or price to sales ratio. Its price to sales ratio is only about 4 as well, so that's not crazy high either. And the really strong ball point in the numbers for me is their earnings growth. So their earnings growth is expected to grow at a 25% per annum for the next 5 years in earnings growth. And that's kind of somewhat due to their buybacks and somewhat due to all the industries that they're going into. But 25% growth in earnings is really, really strong, especially when you're getting a company at a PE ratio of 20. You don't really see that very often. So that's why, for me, this is an excellent company. If you're a value investor, this is kind of perfect, because it's definitely at a fair value, and every other stock in the stock market right now is kind of at an overvalued. So it's definitely at a fair value in my opinion, and possibly even undervalued for the earnings growth that's coming up. It's also quite a safe company in the fact that they make the best chips, so everyone kind of has to use them for their smartphones. So for me, this would be the kind of investment, if I was say 50 or 60, and maybe I'd want to be getting that dividend income, I'd really look at Qualcomm as an excellent dividend value investment. And there is that little bit of growth as well. Like 25% earnings growth is fantastic. I don't know about revenue growth. The revenue growth won't be the same because they'll be still issuing all that buybacks. But a 3% dividend with a fairly safe company is fantastic. For me, however, I'm more of a growth investor. So for me, that's why I'm kind of more interested in Nvidia. So Nvidia kind of are going into the same industries. They're tackling the same industries, but they're not creating the same products. So you can invest in both Qualcomm and Nvidia. Nvidia are creating graphic processing units, which will be required for all the same industries that I mentioned: AI, 5G, etc., autonomous driving. But they're not making the same things that Qualcomm are, but both will be required for the upcoming changes. Now, Nvidia has a much better balance sheet. It has much more growth potential and probable growth for Nvidia. However, it trades at a much higher price multiple and price to earnings multiple. So it kind of depends what you want. Nvidia is a little bit more high risk, high growth, long-term play, because Nvidia will be growing for a long time. And Qualcomm's kind of continuing to come to the end of its growth, but it still has some years of growth in it. But it's kind of the safer play in the fact that it's not at a crazy high valuation, so it's unlikely that it's going to crash or drop significantly or be very volatile in the short term, because they'll be issuing buybacks if that happens. But Nvidia get the nice balance sheet and everything. So what am I personally doing? Well, I'm actually very interested in picking up some Qualcomm. I picked up an initial position, which is what I like to do for stocks that I'm kind of on the fence about, whether I'm not sure whether I want to buy them or sell them, or whether I want to buy them or not buy them. Qualcomm, I'm kind of on the fence. It's a great company. It's going into a lot of great industries, and it's at a fair valuation. I don't think I'm going to fucking 3x my money in the next 2 years with Qualcomm, but I'll be happy enough getting those dividends and getting probably a 10%. If I'm getting a 20% earnings growth compounded every year, I'm very happy for that. Like that's excellent in my opinion. But I definitely would be much more interested if it dropped back down, because that's quite a high valuation in comparison to previous valuations in both a price to sales, price to earnings, and an actual price multiples, and just its actual price is quite high historically. So I'm making an initial position. I've already made an initial position, so then I can keep an eye on it and see if it drops below my cost basis. And if it's dropping significantly below my cost basis, then I'll be likely adding it and making a kind of a medium-sized position in my portfolio. But at these prices, for me, I'm not that interested in dividends because I don't need money right now. I am investing for the very long term, for when I retire. So any dividends I get, I'll just be reinvesting them. So I don't care if a company pays a dividend or not. It doesn't make any difference to me. But if you're someone who's a bit older and wants the dividend income, or you just want the dividend income, Qualcomm's a relatively safe company with some serious growth ahead of it, and that nice dividend, which is relatively safe with the 60% payout ratio, isn't going to be going anywhere anytime soon. And I think if you're going to be buying Qualcomm, I think you probably have time to buy it. I don't think it's going to be jumping anytime soon, crossing the $100 billion mark and staying way above there for a long time. I think $100 billion market cap will act as a bit of resistance in the next year or two. So there'll probably be buying opportunities at this price for another couple of years anyway, if you want to start making a position now and just slowly average your way into this stock, if this is the stock that fits your investment style. Me though, as I said, Nvidia is more interesting to me because they're longer term thinking, long term orientated, and they're reinvesting all their money into more research and development to make cooler products and go after these huge industries like Internet of Things and 5G that are so interesting to me. Alright, so if you appreciate me taking the time out to make this video, I'd hugely appreciate if you could smash the thumbs up button as a thank you. That would mean the world to me. So I really hope you enjoyed watching today's analysis on Qualcomm. And if you made it this far without subscribing, what are you doing? Hit that red button now. Alright, so thank you so much for watching. I really hope you enjoyed, and I can't wait to see you in the next one. Cheers.